Hello, welcome back, everyone. So Fireside Chat, this time with venture capital in Southeast Asia. And it's my pleasure to have Vinnie Lauria with me, who is the founding partner from Golden Gate Ventures here, based here in Singapore. He has been, and Golden Gate Ventures has been here for a long time. Vinnie, I was surprised when you guys sent me the email and said we're celebrating our 10th anniversary, because I still remember when we met just as you guys were arriving or planning to set up here. Is that right?
Yeah, time flies. Yeah, so it's 10 years now. And that is when I arrived. I mean, it's Golden Gate, was really my kind of part of my first arrival to Singapore, spending time in Southeast Asia and just realizing I could see where this next decade's going to go. Grew up through it in the US, 10 years before that. So that's what attracted me to the region.
Yeah, so it's going to be interesting for me. So, and as you, it's a perfect conversation partner because I just came back from Silicon Valley, so we can later on maybe circle back to that and do some comparisons. But maybe to kick off, to what one of your investments that you're very well known for is your investment in Stripe. Now, obviously, fast forward today, everyone's clear. We can all figure out why this was a good investment. But if you think back at the time, as you were contemplating your investment in Stripe, what at the time attracted you to them?
So with Stripe, we actually kind of fortunate in that they were attracted to us. So they were expanding into Southeast Asia. They, two Irish founders started in the US. That was their primary market. When they started going international at first, it was to Europe. And the way they did that was through some local partners and had reached out to then smaller VCs focused on Europe and said, hey, as we launch, can you be our launch partner and let's work with your portfolio? And so it was the same with us. It was Sequoia who made the intro. We were the only VC in Southeast Asia. And again, these Silicon Valley ties are very important that they had reached out to. I was very familiar with Stripe, loved the platform and said, yeah, we'd be honored to do a little bit of an investment and then happy to help introduce you to a portfolio. And a lot of our portfolio companies, fellow NCI grads like Redmart were the early beta testers of Stripe. And so we made those intros. We even helped with some referrals for some of their first few hires here on the ground. So feel really fortunate to have got connected with them when we did. But again, that idea of bringing Silicon Valley experience to Asia and kind of bridging the two different sort of cultures has been part of our DNA, has been part of our branding since we started.
Yeah. So the topic for today, for the chat, I had envisioned also to focus a little bit about venture capital in Southeast Asia and maybe a little bit in terms of history. So as I'm flying in a few data points, maybe you can give our audience that may not be familiar with Southeast Asia and the lay of the land here a little bit of a sense of how this space has evolved. So early stage investing in Southeast Asia.
Yeah. So it's definitely evolved. I would say the biggest way it's evolved is the amount of capital that's here and the competition that has grown. And this is among startups that we're investing in, among VCs. We have to, be smarter, move faster, build out, a deeper network to stay ahead of that curve. As you can see, the amount of capital that has, since 10 years ago is just ballooned to incredible amounts. And we did a research report and basically based on historical data, the amount of capital that's coming back online again post-COVID, have pretty strong projections for the next 3 years, reaching almost 15 billion in investments. So a lot of this is being driven by later stage deals. But what you can definitely see is Series A, Series B, these earlier stage companies are growing and raising more capital.
Right. So now, since we're talking early stage investing, let's talk a little bit about valuations. So again, having just come back from Silicon Valley, I was just stunned to see some of the valuations that are in round A, but also B and C are being written for SaaS companies, but also consumer companies. So obviously, Asia is not Silicon Valley when it comes to valuation. So I'm going to pull out a few data points from some of the reports that we've done together. But maybe just give us a little bit of a context what you are seeing as an investor on the ground.
Sure. So valuations for me, and this might be like my Silicon Valley mindset, are really driven by the amount of capital going into a company. And at the end of the day, for most Series A rounds, even Series B rounds, an entrepreneur is selling off 25 to 30% of their company. And so if they raise 2 million, multiply that, 3 to 4 times. And if they raise 6 million, multiply that 3 to 4 times. And honestly, that's just where valuations end up falling. I mean, there's clearly ways where we're saying why something valued more or valued less. But that has been the trend over decades. And so what we're seeing is more capital coming online. And so with more capital, that's going into more companies. I would say this capital isn't just being thrown around that, hey, we have more cash. There's another trend that's happened in Southeast Asia, and that's this emergence of a second generation entrepreneur. So somebody who started a company before, built it, had a successful exit, is now going back out to raise a second company. They're naturally going to be able to raise a Series A round much larger than their previous one. They're going to have investors that trust them and know them. There's also this generation 1.5. So they are a first-time entrepreneur, but they've been part of a high-growth company. They've been part of Gojek, Grab, Alibaba, Lazada, Redmart. And so they've grown over 3 or 4 years. They see how to build a team. They see how to identify a problem and create a solution. And they're jumping and they're bringing some of their colleagues with them and starting companies. And it's the kind of conditions of these two groups of people coming together that has really created a much, much more mature ecosystem. And again, entering a second generation. The one thing that Silicon Valley has that nobody can compete with is generations upon generations of entrepreneurs. Sure. It all started with Hewlett and Packard. And now, we're 8 generations in. And so that just takes time. But Southeast Asia has grown quite fast to the second generation.
Yeah. And I guess the generational progression, we can't really fast track that, right? I mean, we just need to let the generations run through their progress. But yeah, I appreciate the 1.5 part. So, and I've seen quite a few of my MBAs here go into young companies, and then from there jump off and launch their own businesses. So deal size, where you referred to, how about when you look at valuations, maybe in general, and then specifically for Southeast Asia, especially for you as an experienced investor, having done this for 2 decades. Is it getting ambitious? Is it getting a bit frothy where we are right now? I mean, we just today, I saw in the paper again, reference being made to those so-called crossover investors that come really from a public equity mindset, but are now starting to dabble in venture capital and pre-IPO investments. So hedge funds and the likes. So is the market a bit frothy?
Honestly, like globally, yeah, there's a lot of capital that's moving around. Now, does that mean we hit a peak in 6 to 12 months, or it still has 3 to 5 years to grow? That I don't know, and I don't think anybody can really time that market. But what I can say is here in Southeast Asia, the fact that valuations are sometimes an order of magnitude less than they were in the US. The fact that you have these traditional indicators, GDP growth in the region, manufacturing, because of US-China trade wars going back to, Trump, and even today with some tension, manufacturing has moved to places like Vietnam, for Apple AirPods, for Samsung mobile phones. So there's this internal engine here in these traditional businesses, which basically has people earning more than they did before. And that sort of earning power, the growth, that's like China 15 years ago. And that is a very different sort of delta year over year than you would see out of a market like the US or Europe. So there is a lot of opportunity here just from like the raw materials, raw resources, raw talent on the ground in these traditional sort of industries. That is spilling out into spending power and what people are buying online and even offline. So all industries are growing. So in terms of circling back to potential frothiness, I do think globally everything's at a high. We're coming out of COVID. People are generally optimistic about the future. That's a good thing. As long as policies are in place to not allow things to get like too out of control, we should have a few good years ahead. And no matter what, as this is a global sort of phenomenon, I'm very bullish on Southeast Asia for the next decade. I made the move here from San Francisco. Everybody 10 years ago in the Bay Area, all my friends were like, why Southeast Asia, Singapore, Indonesia, why? Now they don't ask that. How do I expand there? How do I put my business there? What should I be doing? What do I need to know? Completely different conversation. And no matter what the US markets or some of the global markets do, there's going to be a lot of growth here over the next decade. Okay.
So let's talk about venture capital investors. Let's talk about the LPs, the institutionals. So allow me to put my LP hat on. Yeah. And obviously for an investor, it's important to see exits. And in the past, so having been here for more than 2 decades, usually the complaint that I hear from LPs in general in Asia, and it's not just Southeast Asia, valuations are good, but I'm just not seeing the cash coming back. So now, obviously, we've had some exits recently. And can you just share a little bit color on that and what you're expecting going forward when it comes to exits?
Sure. I kind of look at it as like everything's going as planned. The average time to exit in the US is close to 8 years. Yeah. Facebook was more than 10 years. So to get from starting a company to exiting where, and it's not an exit for the CEO, they continue running the company, but for investors, it takes 8 years. And so the fact that, we've been around here for 10 years, I would say the ecosystem really only started taking off 6 years ago, like 2015. So we're kind of 6 years in. So we're just starting. So going back to everything's going as planned, we're just starting to see some exits. That is going to ramp up over the next few years. And Golden Gate and INSEAD, we did a report. And we got some input from New York Stock Exchange and SGX of just what is that potential for exits and who will be driving that. And that's looking very positive. And again, it's all going to the timeline of a first generation sort of ecosystem. The fact is, when you look at markets like China, which are now third generation, the first few exits were these giant companies: Baidu, Alibaba, Tencent. So they were the companies that went public, and then what happened after is they started acquiring companies underneath them, and they became like the top 3 buyers of tech companies for many years in China. I think we're going to see the exact same thing happen here. We have SEA Group, GoTo, Grab. As these companies are either already public or soon to go public, they're going to have the liquidity, the cash, the valuations that they can start acquiring companies. GoTo has acquired over 15 companies already to date. Yeah. I would expect that number to be another 15 over the next 18 months, just because to show that growth, to go horizontal, to go into new markets, new geographies. That's how Gojek went into the Philippines. They acquired coins.ph. So this roll-up strategy by geography and vertical is a really, really good playbook for Southeast Asia, and that's going to drive more exits, more liquidity for investors.
Okay. So SPAC versus IPO.
It's a preference, and so right now SPAC is definitely the flavor, and so you have investors that like it. Why do they like it? Because they initially can make a blind commitment on getting into an opportunity that would normally be more expensive if it was a traditional IPO route. They have the ability to say, you know what, I changed my mind before actually writing that check. So it puts them in a good position to basically see opportunities at a more friendlier investor valuation. So that's why investors like it. Startups like it because it's opening up an opportunity for quicker, easier path to an IPO, which again is an exit for investors. So all around, it's positive. Will this last for 3-5 years? That I don't know. And so the flavor could change, but essentially the goal is pretty similar.
Okay. Very good. Now, entrepreneurs' view, Southeast Asia, maybe versus Silicon Valley, maybe versus Europe. What should an Asian entrepreneur know before they kind of approach you? What should they know about approaching Golden Gate Ventures?
In that sense, I don't think it's different than any entrepreneur globally. I think I have the advantage of started 2 companies. I had pitched, heard a lot more no's than I did hear yeses, but had raised from VCs in 2 different companies. Sure. I think it's pretty universal. So number one, know what the investor invests in. What is their thesis? What do they like? I used to be guilty of just thinking, I have a great idea. They're an investor, and therefore they want to invest in my great idea. But the reality is, as an investor, we have a thesis. Does this investment fall within our thesis? I mean, there's stage and the amount raised and geography, but does this align with business models I tend to invest in? Does this align with my view of the market and growth and competitors? So qualifying that and spending a little time. This is the first rule of sales. Get the other side to really tell you what they want, so you can reframe it back to them. So I think that's universal. So I tell any entrepreneur that. The second thing that I didn't know when I was out there, knocking on doors, is investing is incredibly local. Even under, COVID and this, remote sort of environment, the reason why it's local, even now they can connect with anybody across the world, is because we have to, as an investor, form an opinion on what's going to happen around us. We have to, make assumptions on trends and what's going to happen over the next few years. We tend to know that in our market best. Even though I'm American, I used to live in the Bay Area, I would be really outside the norms of knowing, what great SaaS companies look like in San Francisco right now, what great teams look like, who you should be poaching from, things like that. But what I could tell you is in Indonesia, if you want to hire some engineers, this is, one community to look to. If you want to expand into Vietnam, this is the group or the corporate that you want to kind of partner with. So that's that local information that investors are going to know way better. And that's why investing continues to stay local.
Yeah. So final question, yeah. What's the one thing you, in hindsight, would have loved to know before raising your first fund, especially since you came from the entrepreneurship side?
Yeah, that's a solid question. I'll answer that with 2 parts. The first thing is, I think any entrepreneur, and even raising my first fund, felt like I was starting my 3rd startup and entrepreneurial journey. And I think any entrepreneur has to be ignorantly optimistic. They have to be super optimistic about the future, and they actually have to not know a lot, because if you did know a lot, you would say everything's going to work against you. If I knew what I knew now, I would not have gone and started a first one. I'd be like, that's insurmountable. How am I going to raise that money? I don't have this sort of track record. Okay. So this is where I love the startup industry. It's the only industry in the world where young, useful, unexperienced people are changing behaviors and creating businesses that nobody else can go. So that's why it's a tough question for me. Honestly, I think if there are things I knew, that might have shied me. It would have felt like failure is definite, the more you know. But I guess the one thing that I really didn't know is that it never stops. I still, I love what I do. I love working with entrepreneurs. I guess you kind of think, oh, it's a VC, it's different. Gets easier or something like that. But no, more money, more problems. So, but as any good entrepreneur, I love problems. I love that challenge. There's a bigger mountain to climb. Let's go climb it. So I wouldn't have wanted to know any extra information, but feel really, really fortunate how big Southeast Asia, this space, has grown over the past few years.
So Vinnie, thank you very much for the time. Thank you very much for the points. I will definitely take this video into my class. And I think you have right now one of my former students as an intern. So again, thank you very much for raising the next generation of potential investors as well. So we really appreciate it. Thank you very much, Vinnie Lauria, managing partner and founding partner of Golden Gate Ventures here in Singapore, and looking at investments in Southeast Asia. Thank you.
Thank you.